flashes. We'll discuss this with Jitendra Sriram, who's with us, Senior Fund Manager, Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. Thanks very much for joining us. So we'll talk about Grow when we have some of those numbers come up on the screen. But just the market, Jitendra, how are you feeling about things?
So overall, I think it is looking far more positive at this point ever since this festive season has begun. Because if we look at even the earnings picture that has unfolded so far, and I think almost about more than 50% of the Nifty names have reported, I think after many quarters, we are actually starting to see the recovery of earnings growth come in. So if I look at the large cap universe, which is ideally the Nifty 100, I think for the companies that are reported, we are seeing something like about a 13% kind of earnings growth that is coming. So it's double digits after probably 3 or 4 quarters now. And mid-cap is almost about the 25% mark. So I think we are at least seeing some recovery in earnings that are starting to come in, which is very heartening.
I think that Grow bit, the anchor book names, etc., we will put up. But 3,000 crores is the issue size and 50,000 crores is the demand. But institutional investors don't have to put in any money. I mean, it's not as if they have to put in 50,000 crores. I mean, it's basically, to transfer the money in the escrow. You get just expression of interest in that sense. And in that sense, I mean, a fund with the AUM of 500 crores, I mean, if it wants, it can express an interest of 2,000 crores. So it's got nothing to do with the size of the AUM or any fund managers. So in that sense, when you look at some of these numbers, don't get carried away. Of course, there is great demand and it shows interest, but you're not actually putting the money into an escrow waiting for allotment to take place. So just wanted to make that point. Some of the names, of course, who've participated or rather have put in bids are up on your screens as well, all source-based information. Jitendra, one more capital market name. Any thoughts out here on this space, and maybe if you have a view on Grow as well?
Not specifically on Grow, but I would say, the fact that market is getting very comfortable with these platforms kind of businesses, because they give you a lot of non-linearity, and you have seen multiple names, the quick commerce names, or whether it be online insurers, online brokers. I think the fact is that you're seeing very, if the model becomes successful, and I think the risk is there. The risk is that maybe not everything survives. Some of these will turn up as survivors, but if you are with the survivors, you probably make disproportionate returns in those platform kind of names. And it's true for payment systems and various other examples that you have there. I think that is what is probably exciting a lot of people towards this space, which is it. I mean, if you were to just step out from that, broking is a fairly old business, but I think the point is that the non-linearity that comes with the platforms.
Hi, Jitendra, good to have you in. Speaking about platforms, a lot of these new age businesses that are in the market or are listing, I mean, there's a fair amount of debate going on valuations as always, right? By the way, just a while back, I think Zepto put out some sort of a release saying that they are no longer going to charge a platform fee. I'm not too sure about the details or the veracity of it right now. But if that's true, it could be very disruptive, right, for the other players as well. So when it comes to quick commerce and food delivery, I mean, what are your thoughts given the valuations?
No, I think all these businesses there will obviously, it's not going to be a linear journey upwards. In a sense, there is going to be some point of time where multiple newer entrants try to establish their foothold. There will be certain pricing pressures which come in, and again, there will be some consolidation and move back up. But these are typically structured. Sometimes these battles are not even at the marketplace. They might be in your mobile phone. For example, for any app, for example, a payment system, you may not keep more than 2 apps. Or for example, a cab hailing app, you may not keep more than 2 apps. So the point is sometimes the battle is in your mobile phone rather than in the marketplace. So if you are able to succeed and establish your share of mind share with the customers, you become the winner in that. So it's largely like a winner-take-all model. So to an extent, it might be that the first player has about a 55-60% market share, the second person with 30%, and all the others are clustered in that 10-15% market share. So it can very well turn out to be those kind of businesses.
That's nicely put, right? The battle is in the mobile phone, and that's really where the stakes are the highest. Battle in the mind, and then therefore the mobile phone. That's how I guess these internet businesses are built. Nigel?
Well, that's right. Hi, Jitendra. Good to see you, Win. I recall we had a chat a month or so ago, and you were telling us that you like some of these consumer-facing themes, discretionary themes as well. Some of them have done quite well, and clearly the street believes that discretionary spend is only going to go up from here on, and some of the discretionary consumption stocks are poised for better times. Any fresh take you have either on this sector or something new that you've started liking? The auto sales, for example, did come out, and they look pretty good.
Yeah, I think auto has been quite decent, and especially the fact that, GST has obviously been a catalyst for not only enhancing sentiment, but we are also seeing, whatever reports we get from the trade, we are seeing a lot more of showroom interest and so on and so forth. Model launches are also starting to perk up and all that. So I think auto is definitely one area that is starting to look up. I would also probably put that, consumer discretionary could also play out in a lot of other things like, whether it is hotels or jewelry and stuff like that. All these are also, we heard some very fabulous, numbers for Dhanteras and all moving around in the social media. So time will tell whether how much of it was correct or not. But I think those are at least early indicators that all these measures that the government took, right from income tax cuts and then following up with the GST cut and so on, at least it's starting to rub off on the consumer sentiment as such.
Okay, all right. Jitendra, a final word before we let you go. You're sounding pretty optimistic on the prospects of market, and we discussed the last time around as well. Hopefully, earnings do come back. What's the biggest risk to the market? Because government action has come about. We have seen that the RBI as well, they have fired quite a few of their bullets. The global environment itself is holding out. According to you, what's the big risk to the Indian equity markets?
I think I would probably put inflation as the biggest risk because of what is happening with Trump tariffs, etc. I think there is definitely two things which are happening, which are probably a little bit of an upside risk on inflation. It may not be an India-specific factor. One is obviously the fact that you are seeing the tariffs lead to higher levels of inflation. The second is also that with Fed cutting rates, there is a weaker dollar environment which one is into, and which is leading to a surge in commodity prices also, and you can see it in all your metals index and various other indices that commodity prices are spurting, which can have with a lag effect some push up on the inflation front. So we'll have to keep an eye on that. I think that could be the big risk for markets.
Okay. All right, we'll leave it on that note for today. Thank you very much for joining in. Good to get that perspective from you on the market. Quick check back on the screen.